Sunday morning, MMTs. This is called the VIX, and it's related to the S&P 500. And once again, it's a fear indicator as a lagging fear. Well, it's fear, but it kind of lags the overall market. But the thing about what you want to know, it's a standard public analysis. It's not your market maker platform analysis, but it tells you where the buyer and the sellers are in the broader market in that public model. Now, one of the things you want to be aware of here, why it's populating, is when the reversal happened in the S&P, as we called for, we were also showing these low levels of fear called complacency for a period of time. And that the longer that this was down here, the greater that top right into that 1340, 1348 handle on the S&P, like we said, MMTs, that's where the big institutional money was going to get off before it even got there, and sure it did. And when those sell programs were hitting and we gapped down on the S&P, we gapped up here. So when we gapped down from the major top that I showed in the previous video, this was that gap up in the VIX. Then we came back, so we had a counter trend. And we came back for 3 days, but look at that big SMF confirmation right here. That green bar. Look at that. Look at the depth of that. So basically the fear came back in. We came back down. We never did come back down and fill this in like we are over here at the current stage, but we started ticking up, and then the fear got all the way up to 3120. All the way down here on the VIX, meaning that because there was no fear, this thing had a huge breakout. That's double the amount. During that whole bear raid, the short side of the tape was printing. This was breaking out to confirm it. And it is. And we're back down here to these levels. SMF MMTs. Just like I put in the S&P 500 video, you want to put that video with this analysis on a daily level, because I'm going to tell you, we've come right back down in here. Now we're going into the end of the quarter. It's the first quarter of 2011. What do I mean? It started January, February, and the end of March is coming. And today is 3/27 of 2011. Monday is the 28th. Tuesday is the 29th. And Wednesday is the 30th. And that's the tail end, going into the tail end of the month. Is if big money is going to come back into this market, MMTs, then we are going to come all the way back down to these levels here. Because we will. And we'll be right back there where there's a lot less fear in the market. And if we're going to have less fear in the market, then that means that equities are going to be bouncing in your SMF market maker platform off of those teeny lines, and they're going to be bouncing hard. In the leaderships, the higher beta stocks that we make markets on. So I just want everyone to know that this here, this low level must remain, because if we start to go back up to this half bar even, this is going to be the maximum. Here, let me pull it up under the hood here. So this half bar right here, MMTs, is 19.62 on that. So basically, as long as we could come up and test it, but you'd have to see an immediate rollover. Because if this doesn't stay down toward the lows or roll over intraday, then that means that the equities that trade in the VIX are related to the VIX, and which is the S&P. The leadership will be weak. There's going to have to bring these levels down here. You're going to have to see some money being pumped into the transports and the financials. The financials have lagged the rally. Semiconductors, there's a couple of them in this, and that's related to that. More of those are NASDAQ stocks, but nonetheless, if we start to go up, then that means the intraday shorts are going to get locked in very quickly, and they're going to slide the bid down. Because as this goes up, the selling will increase in the S&P 500 index right here. So this VIX, which is this, is related to, and they're both right here. It's related to. They have a correlation. They have a relationship. So basically, that's what we're going to be looking at. The other area of interest is 2119 on this daily bar. In case we are to go that way, then that means that the put side of the market in the options market is going to be paying, not the call side in the short term. Okay, for intraday options trading, market making skill applies in that capacity leveled. So on that capacity levels, that intraday level, knowing that the put side, the options on the put side go up in value when this goes up in value. And we just want to be clear of that. So that, yes, you can still get call contracts, but when you do get them at wholesale price, you may get you'll make a profit, but it's not going to be as much as it has been. When this is going down, then the call side of the market works well, because it does. So basically, we've got this level here, we've got that level there. We're going to see that if we break out at the end of the quarterly trading range for 2011, that we gap down here on Monday and we start setting back up down here. The longer that it stays, then the stronger that the other side of the market's going to be at the top level, MMTs. So for the market maker intraday trade management, as far as understanding these key indexes, the Dow, the NASDAQ 100, S&P 500, depending on the sectors and depending on the leadership in these various indexes, there is an immediate correlation as far as making a market, MMTs, and that's what you do here. So we gap down, then that means that we're going to go higher in the S&P 500. The longer that the fear stays, we could even undercut the lows, but we're going to see how it sets up here during the next 3 days, the end of the quarter. That's what this is about. So that's the trade management, and I've gone over it with you outside of the video, so I don't need to bore you anymore. Just understand that if we drop down, then the market and stocks off support that are leadership will bounce. If this is going up, then that means that stocks are going to roll over, and that means that 85% of your entries are going to be on the short side because equities are going to be weak. They're just going to roll over in price, and you can get better market maker debit transactions that way. S&P 500 relationship to the VIX daily.